What is going on, YouTube? Welcome to Inflation Nation of America. Guys, we are heading towards stagflation. Oh, Brendan, do you have any good news? Well, let's talk about this. 9.1 CPI print, the highest one yet. We may already be in a recession. That Q2 GDP print comes out the day after the Fed meets at the end of this month. And most likely, the Fed will now be looking at 100 basis points. The market is already pricing that in with a 70 to 75% chance, and then the market's pricing in now 75 basis point hike in September. But when I have on the TV in front of me Jim Cramer, right, because his predictions are always so great, but he says this is most likely peak inflation. It could be peak inflation, but I would submit to you that doesn't matter. Why doesn't that matter? Because peak inflation doesn't matter. What matters is high inflation. Do you guys really care if inflation's 9.1 versus 8.7? No, because everybody that watches this channel knows that that doesn't translate to a one-to-one relationship in prices. Food prices, according to the UN, watch my Inflation Nation video, are the highest they've ever been on the UN Food Index. 345 million people are facing starvation. We have escalated, elevated gasoline prices still, even though they have come down. Energy prices overall are still up over 55%. So yes, we could have a lower print next month, a lower print the month after that. But I would submit to you, for the real person, the person that's not making seven figures, over $1 million a year, the number matters. So when they say the worst is behind us, I think the worst is sticking with us for a long time. Just as Jeremy Grantham said and Ray Dalio said, inflation will be part of the conversation for a long time. Elevated inflation, meaning probably above 5% for years. We're going into stagflation, guys. Stagflation is a shrinking economy, which will be proven by this Q2 GDP. If it is positive, it will be barely positive. And most likely, the Fed will end up raising rates to a point where something breaks in the market. People are expecting the Fed to pivot. The market's pricing a Fed pivot in earlier. We shall see. The Fed, if the Fed does pivot, guys, you have to remember, they're not pivoting in a vacuum. And by pivot, I mean they stop raising rates. They may even cut rates. Why would they do that if inflation's over 8%? Here's the answer. The answer is they would pivot because everything's crashing. The economy's crashing. The market's crashing. So as traders, as people seeking financial freedom, this is the opportunity to earn money. And that's what I care about. And that's what a lot of you care about. I just want you guys to be aware, very realistically, we are heading into stagflation, despite what the talking heads, the permabulls say on TV. Oh, the worst numbers behind us. The worst numbers not behind us because the prices aren't coming down. When the prices come down, then we can say the worst numbers are behind us, because whether inflation stayed at 7% or 9.1%, anywhere in that range, guys, you're going to have elevated prices. And what does that do to the consumer? 70% of the economy is the consumer. You have to remember that. 70% of the economy is the consumer. So if you're not buying things because they're overpriced, or you're moderating or modifying how you spend your money because now your dollars don't stretch as far, it's going to affect the economy. The economy is shrinking. All the metrics show it already. It's just at what rate? And at what rate will that kick in? And guys, we haven't had earnings revisions in the equities markets yet. Wait till all of that stuff kicks in. Like I said, this first leg, I do believe we have at least one more leg down. And when that next leg comes down, these things often have a chance, when bubbles burst, of spiraling into a financial crisis. The difference between this bubble and the great financial crisis in '08 and the dot-com at the turn of the, or coming into the new century, the difference is inflation. We didn't have an inflationary environment in either of those two bubbles. The Fed was able to step in and bail out the markets, bail out the banks, bail out the bad actors. Now, if they do that, if the markets really start to come down and they try to bail them out, then you run the risk of hyperinflation. And then you can say hello to Zimbabwe and hello to Venezuela and hello to Turkey, because they know what it's like to have hyperinflation. So, the good news. Is there good news? Well, I mean, the good news is the markets didn't crater today, okay? And that's good news because I didn't have a trade on the market right now. We got whipsaws across the market, guys. Whipsaws. So I'm going to briefly go over the equities really quickly, guys. Just looking at this on the daily time frame, the S&P, it went up to 38.69. It went down to 37.50, and it closed down 26 points, okay? Spot 6.8%. All the markets did this, so I don't want to spend too much time on them. Looking at the NASDAQ, same thing here. Let's look at the candle here. You can see the whipsaw, okay? So we knew this was a possibility. The high of 11,943, the low of 11,455, roughly 500 points, and the NASDAQ finished down minus 45 points, spot 39%. So the markets were pretty flat, so we're going to go ahead and move this out of the way, and let's look at Bitcoin, okay? Now, why are the markets kind of flat? Because earnings start tomorrow. The banks, JP Morgan reports tomorrow earnings. That pay attention to what they say. It's not their earnings. The earnings may be okay for some of these companies. Remember, the earnings are for the previous quarter, right? Now, some of the companies, obviously, the earnings are not going to be okay, but there may be some winners there. It's the guidance. That's what people are paying attention to. The guidance for these companies. What are they predicting for the future? And if the company's guidance start changing, that's when you start seeing earning revisions come in, and that's when you can start seeing things really move over. And what's really interesting is the day after that Fed meets, I'm telling you, if the Fed does raise 100 basis points, the next day, the GDP comes out the end of this month, the GDP print, you could have the Fed raising 100 basis points and then a recession print on that GDP. What an interesting time to be trading, okay? Very, very interesting time to be trading. And there's camps forming. I told you, there's camps forming. Fed shouldn't be aggressive. We're going into a recession if they're too aggressive. Look, the economy is slowing. Other camp says 9.1% inflation, highest inflation in 41 years. The Fed is way behind the curve. Guys, we have market history. I'm continuing my rant now. We have market history to go over, 100 years of market history. Couple of things to look at. Not once in our 100 years of market history with inflationary times has inflation ever been over 5%, and we've been able to control it with rates that were below the inflation rate. We're at 1.6% and for the Fed funds rate and 9.1% on the CPI. So in real terms, that means the Fed funds rate would need to be like 10%. That's how far behind we are. And obviously, over time, that inflation number will come down as the economy slows, as potentially supply chains open up. But that inflation number is not coming down for a very long time to that Fed target of 2%. Okay, that's not coming down for a very long time. And the other thing is, we have never had inflation above 5%. In the history of our market, we have never had inflation above 5% that didn't end in a recession. Okay, just keep those two things in your mind because those are facts. And what you hear on TV all the time is, but this time it will be different. Soft landing, still a real possibility because this time it will be different. Well, it's never been different for 100 years, but sure, this time it will be different. From the Fed that said inflation was transitory, from a administration in power, the Biden administration that's been spending money like a drunken sailor, 41% of all the money in current circulation printed since February 2020. 41%, and they wonder why we have inflation. And the White House is signaling, they have their people out today saying it's a global phenomenon. It's a global phenomenon. It's not just America, it's global. You know why it's global? Because all the banks follow the Fed. Most of these central banks around the world, including Europe, they've had negative interest rates or 0% interest rates. And that's why we've had the longest bull market run in stock market history. And that is why you see so many people thrown off on their predictions about where Bitcoin's going, where equities are going, because they don't understand market cycles. Looking at Bitcoin. Bitcoin, guys, on the daily, good transition, right? You can see we pumped down, or we pumped up from here, but we had the volatility with the marketplace on our candle, right? So we had the volatility here. We went down we were high at 20,000, went down to just under 19,000, 18,892. And you can see the same thing here. Now we do have that neckline for this double top down a little bit lower. It's jagged here, but basically above 18.6. You want to stay, and this is just going to follow the market, guys. Bitcoin's not an inflation hedge. When I first came to crypto, that's all I heard. Digital gold, and it's an inflation hedge. Inflation's the highest it's ever been, so Bitcoin should be taking off like crazy. Gold's not taking off either, because in these markets, guys, when things crash, when the actual bubbles burst, everything dumps, including the metals. Everything dumps. That's why there is no place to hide. But let's look at this with Ichi, and let's throw this on here. and see what we're looking at here with the cloud. So our cloud, nothing's changed much on the daily. As you guys know, it's really lagging behind everything else from current time frame. So we're trying to hold our support here. We got to hold 19,227, which we are right now. If you start getting below that, around the 18.6 number, your double top's breaking, and most likely you're making a new low in this bear market dissension. Okay, going to the 8-hour, you can see this on Ichi. We're contacting the cloud, spiraling around. Now this is the area that we need to look at. Again, this is my #1 proficiency, picking areas in Ichi that we can punch through. Been very accurate with it. I think I'm undefeated with this. So July 16th, guys, is probably my first area we can look at here. What did it say, July 13th? If we're going to make a move, July 16th is a time to start initiating that. And this cloud gets super I can't even draw it. Gets super thin. So July 16th, there on after, and next week is when earnings really kick off. We have some companies this week, but next week earnings really kick off. If those earnings look good on some of these big companies, if like tech sector particularly, and their guidance isn't too negative, you could see some upward movement. But again, conversely, if those earnings are bad and the guidance is bad, we can see a big dump in the market. So just be very well aware. Looking at our money flow, we are still bearish. We have resistance from our EMA cloud. Go to the 4-hour. More important here with all the action, the 4-hour time frame is key. Looking at our Donchian, top of the Donchian, 1618 rejected. Bitcoin dissension, bottom of the Donchian, trying to work our way back up. As you can see, the 200, 220, 233 are moving down as well. Let's turn that off and let's look at the Ichi here on the 4-hour. And you can see, just as we've been talking about, every single Kumo twist, you get some action. You got a wick up through here, Kumo twist here, you punch through, you had to come back down, make your cut pattern, punch back up, and then you use through the edge of the cloud here, got rejected, and where'd you fall through? The Kumo twist. So if we just look at the pattern, and look at where we're coming to over here again, July 16th. Okay, July 16th, out in this area, you could see Bitcoin just doing this. And if it's going to punch through, now you're going to have the 200 descending at the same time. And it's already at that 1 fib. Do you see that? It's already at that 1 fib right now. So we'll have to watch and see in the next 3 days how low this goes. I can't really tell you because it just matters on the price action how quickly it descends. But let's see if it stays around that 1 fib or just slightly below. But that's your first area you're looking at rejection for Bitcoin. Okay, if Bitcoin does pump up, see if it can flip the 4-hour 200, and that 1 fib's at 21,000. So you got to see if it can flip that. If it does flip that, got to look at your 1618 guys because we already got rejected here, and you have the 233 descending down to the 1618. And of course the volume here, you can see from that selling volume, again this is 4-hour volume, and we're still bearish on the money flow. Money flow made a double top here, so we'll see if this trend continues for Bitcoin to keep this bullish trend. If the banks don't report strong earnings, I mean, this is a day-by-day case, guys. This is why it's really hard to predict for you, because it's a day-by-day case to see what happens in this marketplace because, again, this is the most data-driven market I've ever traded in my life. Let's look at the DXY really quick. DXY is still above 108, guys. It's 108.020. Holding up here. See, we got 107 spot 300 beneath us for support. We have a GAN fan beneath us for support. And again, I expect this to continue to rise up over time. Okay, over time, and I do think we're going to get up to 120, possibly as high as 124. That's crazy strength for the US dollar, and that's going to affect the earnings for all the different multinational companies, of which 40% of the S&P gets earnings from overseas. So we have to watch that. Tomorrow, guys, we'll go over the metals, and we'll look at oil and battery. Good timings, the battery thing just came on. And guys, I hope you enjoyed the video, and check out our video description for all of our sponsors. And I think that's it, guys. Have a fantastic evening. Talk to you guys tomorrow.